Hey, what's up guys? We're group number 3 here at the Bear for Max's 21st birthday. Just talking about some basic accounting information to run a small business such as the Bear. We'll start first with Andrew.
Hey guys, I'm Andrew. I'm going to talk real quick here about the importance of a profit-loss statement to a small business. The profit-loss statement is also referred to as the earnings statement, operating statement, or most commonly, the income statement. The main purpose of the profit-loss statement is to show managers or investors whether the company gained or lost money during any given period. The income statement shows the company's net income or loss by subtracting costs and expenses from the income of the period. The company's income is the amount of money the company made over the period by revenue. Revenue is the amount of money that the company made by selling product. For example, here at the Bear, the main revenue comes from selling food and drinks. There are a variety of expenses that are subtracted from the revenue in order to attain the company's net income. These expenses also vary from company to company. However, the 5 main categories of expenses are general and administrative expenses, selling general and administrative expenses, research and development expenses, and of course depreciation expense. The most important part of the profit-loss statement or income statement is what's called the bottom line, which is another word for the net income. They call it the bottom line because it's at the bottom of the income statement. It shows overall revenues versus expenses, how much the company gained or lost during any given period. This is a pretty important number for investors and managers to look at so that they can figure out, how well or badly that the company's doing. I'm going to kick it over here for some talk about the balance sheet.
Alright, hey guys, my name is Mac. I'm here to talk about the balance sheet. Essentially the balance sheet is a snapshot of the financial statements that shows the value of the firm's assets and liabilities at a particular time. The assets, representing the uses of the funds raised, are listed on the left-hand side of the balance sheet. The liabilities are representing the sources of that funding. Those are listed on the right-hand side of the balance sheet. Some assets can be turned more easily into cash than others. Those are known as liquid assets. The accountants put the most liquid assets at the top of the list and work down to the least liquid. And I'm gonna pass it over here, Travis, right over here.
What's up guys? I'll be talking about the cash flow, which is going to reflect the Bear's liquidity. There's 3 different activities, which are operating, investing, and financing activities. Money coming into the Bear is cash inflow. Money that they're spending to go out is cash outflow. So operating activities would be like receipts from selling burgers, selling beers. That would be cash inflow. A cash outflow would be payment to suppliers, obviously buy beer, buy the food and everything, and paying their bartenders and other employees here at the Bear. Investing activities would be something like purchasing the building here or the land that the Bear is built on. That would be a cash outflow. And also financing activities would be proceeds from issuing short and long-term debt, and also payments of dividends to stockholders if we had any here at the Bear. That's about it for the cash flow, and now on to Tommy.
Hey guys, I'm Tommy. I'm here to talk about employment in a small business. One of the most important administrations to deal with employment is the Employment Development Department, or EDD. And it provides a bunch of benefits under the employment services, employment insurance, state disability insurance, workforce investment, and labor market information programs. It provides these benefits to over 1 million Californians. The EDD also helps employees of small businesses by providing training, providing information, protecting employees in case of insurance disabilities. They pay benefits, they offer tax advice, and they help with wage regulation. And since I already have your attention, I'd also like to talk about government regulation of businesses. There's a lot of licenses required to operate a small business such as the Bear. Some of these most important ones are the fire safety permit, the alarm permit, and the alcohol license. And these permits and licenses are regulated on a federal, state, and local level, with local being the most specific to the area. And now I'd like to pass it on to Andrew.
One of the basic types of accounting information needed to run a small business is inventory accounting. Inventory may seem hard to understand, but in retrospect it is pretty simple. You first start with your beginning inventory, then no matter when or how much you sell, the value of your inventory will remain constant. Two basic methods used in small business for dealing with inventory are first in, first out, and last in, first out. First in, first out, or FIFO, is pretty much exactly how it sounds. For what inventory you get first will be sold first. This is common in grocery stores and restaurants. For example, if you work at the Bear, if you work at the Bear and you just received a couple kegs for beer, you would sell the beers on taps and the kegs you have in storage before you tap into the new kegs. The second method is last in, first out, or LIFO. The advantage of LIFO is that usually the last items purchased and received are most expensive, and thus you get more money for them, so you have to sell them as you get them. This happens to be common in stores such as Best Buy and like other electronic stores, but it is seen in all different aspects of stores. Though during inflation, it is better to use FIFO because you will have a higher net income than if you use LIFO. Though if you use LIFO, the ending inventory will be a lower number on the balance sheet. A company has the right to use either method they choose and to benefit from the effects. Thank you very much. I'll pass it back off to Travis.
Alright guys, that's the basic information that you guys need to run a small business. Hope that helps. Have a good one.